Well, what is going on, guys? Luke here today, and this is pretty much what my buy button looks like after this week. I mean, seriously, guys, the biggest question I have to answer every day is what stocks I'm going to buy. Almost all the talk in my group is centered around price targets for stocks or who is buying what on that day, and basically competing for who gets the lowest price on that stock that day. But this doesn't mean that all the beat down stocks are coming back, and most certainly it does not mean that all those stocks I want to own either. I don't care that some of these are popular among retail investors. I mean, I don't care that there are big YouTube channels built around them. I'm avoiding these stocks like the plague. Now, I'm not trying to be controversial here or anything else, but I cannot just act like all stocks are great stocks and going to the moon. So I will run through the 4 stocks that I am actually avoiding, and I will tell you exactly why I'm avoiding them, and I will tell you exactly what to do if you happen to own any of these stocks. I just ask in exchange for you to gently tap that like button and consider subscribing too. It's super easy to do. So as discussed in my last video, the sale for my group is actually ending, and I do appreciate all the feedback I received on all that. Thank you guys very much. So if you want to lock in your discounted rate for as long as you keep your membership, then make sure you sign up now so you get full and direct access to me and a group of 6 and 7 figure investors, and you get access to 4 courses for free that teach you how to plan, do evaluation, build up your cash, and you get to see my watch list with price targets, my buy and sell alerts. We got live weekly Q&As at a minimum, if not more, exclusive videos galore, and a ton more, so check out the pinned comment. Now, I'm not looking down on anybody or saying what I pick is right and what you pick is wrong or anything like that. However, I see significant headwinds for these companies, and being beat down isn't one of the headwinds that I'm talking about. I may get a lot of hate, and that's okay. My channel is small because I give you the truth, and I'm not a huge channel where everything is just going to the moon, so that is to be expected. I'm expecting some hate. But if you do happen to own any of these stocks, I'll tell you exactly how to handle it. But in the meantime, go ahead and comment down below with the stocks you would avoid like the plague. So stock number 1 I would avoid would be Teladoc. Now, this stock has been covered a lot lately by a lot of folks, so I won't go crazy here, but this is a stock I didn't get the euphoria about from the start. It was clearly a pandemic stay-at-home play. That business would, basically deteriorate fast when the world actually opened back up. I'm sorry, but the biggest users in healthcare in the US are older folks, and they like to go see the doctor in person. Heck, I know I'm just a little bit old, but for anything other than a prescription refill, I want to actually see the doc too. And then when I looked at the business model, I felt it was easily repeatable and scalable by competitors, meaning I just didn't see the innovation moat that ARK likes to tout about many of their stock picks. Now, maybe I'm missing something completely. That absolutely could be it, but it kept me from a 90+% beat down so far. So stock number 2 I would avoid is Peloton. Why is this stock so popular? I mean, I just don't get it. Yeah, it's down like 90+%, but that doesn't make it a deal either. And now they are looking for a minority investor in the company, so I guess some investors out there are using it as some sort of weird trade of some sort. The strategies are getting wild out there for sure. I just don't understand the play here at all. Outside of a complete buyout scenario, not a minority buyer, but outside of that, this is a dead stock for a very long time, if not forever, in my opinion, of course. No doubt they are nice machines, but it's a niche product for a niche market, and it always will be. And yes, I know you can just go ahead and help me pronounce that word right now. I can't say the word niche right, and I never have, so you just got to kind of go with it. Bottom line, you are strictly gambling or trading if you are buying it in hopes that they will get bought out. And even then, there is no guarantee that you come out good on this trade. I'm not a trader, so this makes no sense to me as a long-term play. So stock number 3 would be Bingo. Ah, yes, Bingo, my favorite stock, the overnight penny stock sensation that I said was overvalued at $8, much less at the $15 it eventually hit, and it got me a ton of hate and people telling me I don't know how to invest. They were unsubscribing and subscribing to real investors who were hyping this up as the next thing to go to the moon. It was by far and away the video I got the most destroyed in down in the comment section by far. For perspective, they had no revenue at the peak of this run, were expected to delist just a month or so prior to the run, and it was a $4 billion market cap. $4 billion, guys. I've seen penny stock runs before, but $4 billion with no revenue is just crazy. And don't worry, I heard all the talk. They were going to change the world. Well, guess what? You can cure cancer, but if the product is not profitable or nobody buys it, that stock will go nowhere regardless. So this stock to me is firmly in the speculative category, and in this type of market, those aren't the places I like to put my money. And the final stock would be AMC. Now, I know the apes are strong. I love the GameStop movement and what the initial meaning behind it was and what it was all about. I really love that idea. However, unfortunately, it quickly spiraled out of control with the apes and others spewing more misinformation than the hedge funds were spewing. And unfortunately, instead of all that misinformation hurting the hedge funds, the retail investors who bought into those false narratives and misinformation put out by the people who were bullish on the stock are actually the ones that got hurt. I had person after person in my group ask repeatedly in the chat, during live streams, and my DMs, basically everywhere, asking me when AMC was going to some unrealistic astronomical price based on if all the hedges all covered for real. The numbers were insane and had a few major flaws from the start to begin with before it ever started. I seriously got so many questions and answered so many questions, I had to do a dedicated video basically saying it's never going to happen because 1, they know the rules better than you or the SEC, and the SEC will find nothing because, well, it's the SEC. And 2, even if they had to cover, that would mean AMC would be worth more than the entire stock market combined. Trillions upon trillions of dollars. And the only person that could cover that short would be the Fed, so the whole premise of the ultimate squeeze that would make you rich wasn't possible to begin with from the start. And the last reason is, the hedges can just file bankruptcy and not pay jack to anyone legally. Oh yeah, and then they would just open up shop under a different name the very next day and keep right on going instead of paying out crazy amounts to cover. And yes, that's perfectly legal too. Now I personally love going to the movies, so I hope the management rights this ship and turns it around. But for now, it's still a money loser right now, and so far people are not going back as much as they were before the pandemic. It's getting better, but they're not back as much as they were before. I would consider buying at a more reasonable valuation, but it's just not there, and honestly, it's not even close to what I would consider a more reasonable valuation. So what do you do if you own any of these stocks? Well, if it were me, I would have to make some tough decisions, but I need to answer these questions before making those tough decisions. Did I buy this stock with a plan? I mean, if not, that is step 1 right there. Plan your exit. If it's now or 5 years from now, plan it. Where's the money going next and all that good stuff like that? Did I do a valuation? And if so, are my assumptions still valid for that valuation? Did I buy based on a video or an article? Which then you have to be honest about, did you do proper due diligence if that's all you did? If not, it's okay to admit that you didn't. Then put in the work, and if you still see that it was a mistake, then you might want to look at selling. It happens to all of us, but you cannot determine that a mistake until you actually do the work. And the final point I want to make is not every stock is right for me, but that doesn't make it wrong for you too. Maybe they are a small part of your portfolio and it's one of your speculative plays. Or maybe you're just a high-risk crazy person, so you're comfortable with owning high-risk, kind of hero to zero type stocks. Then maybe it does fit your plan. This is why answering those questions is key. It is completely possible those stocks will thrive and my horses that I have picked will completely fail. It is possible. Anything is possible in the stock market. But when I work through my plan, my analysis, these stocks did not fit and I see better opportunities out there. And if you don't know how to plan and do evaluations, set price targets, and you need help and support doing these things during these troubled times, make sure you join the Market Insiders private group before the sale ends. Or click this video here for even more stocks I've been buying lately. So thanks for watching, and we'll see you in the next one.